We are not SEBI registered advisor. This video is only for educational purposes, and please take your financial advisor's advice before making any investment decision.
So today we will be discussing about Q4 FY22 results of Surya Roshni. You can watch our previous detailed videos on the business analysis of Surya Roshni. So Surya Roshni has achieved $1 billion revenue milestone in FY22. Their revenue jumped from 5,561 crore to 7,731 crore, which is a significant jump. There is a change in EBITDA as well. In FY21, their EBITDA margin was 384 divided by 5561, which was around 6.9%. And in FY22, it was around 449 divided by 7,331, which was around 5.8%. So the drop in EBITDA was because of various reasons such as rise in commodity prices, supply chain issues. So this margins is not just this drop in margin is not just observed in Surya Roshni but also across the various industries such as chemical, pharma, etc. In case of Surya Roshni, the sales have boosted up, but the margins have compressed. So now a question might arise here that in our previous detailed video we had mentioned that Surya had some pricing power in its products. So why are they not able to pass on this price to their customers? So the point here is the passing of prices to customers comes with a lag. There are quarterly contracts. For example, suppose steel prices has increased by ₹100. So the reflection of rise in 100 rupees price will be visible in next quarter. So if the prices of commodities such as steel rises by ₹100, the discussion with customers for the rise in price will be done for the next quarter. And suppose prices further increase to ₹130, then the prices charged from the customers will be based on the deal which was done on the basis of the prices of previous quarter, which was ₹100. So margin compression is continuously observed when commodity prices are continuously rising. It keeps on compressing until prices of commodity stabilizes. Surya's profit has shown tremendous growth despite of all the external headwinds. Their EBITDA has increased by 17% and profits increased by 29%. The reason for that is lean balance sheet with a consistent reduction in debt. Reduction in debt has reduced Surya's interest payments. So the positive result of those interest reduction can be seen in their profits. In Q4 FY22, Surya has generated 2,301 crore rupees revenue, which is 34% more than Q4 FY21. Their margins were 154 divided by 2301, which was around 6.7%. So overall financial year FY22 had margins of 5.8%, but in Q4 it is 6.7%. Inference that can be drawn from here is that prices of commodities has stabilized from the last 1 or 2 quarters. So the margin improvements have been observed in Q4 FY22. Their margins used to be around 7%, which dropped down to 5% in second and third quarter of FY22. As steel is the key raw material in Surya's steel pipe segment, and as steel prices kept on rising, their material cost kept on increasing. So it went up to 81%, and the rise in 3% was clearly visible in their margins. In Q4, material cost reduced to 79%, which shows that the prices of material have stabilized and their revenue has increased, which is reflected in their margins as well. The profit increased by 41%. The reason for this is that the finance cost has reduced and their debt is reduced. And also, as mentioned in the detailed business analysis video of Surya Roshni, they are moving towards high value added products such as 3LP pipes, API pipes, and their order book is also increasing. Their ROCE increased from 17.8% to 23.6%, and ROE improved from 17.5 to 22%.
They proactively took multiple price hikes to partly mitigate the higher input cost. This shows that they have some pricing power, but it is not true for all the products in their portfolio. but they definitely have some pricing power in high value products such as 3LP pipes, API pipes, so they are partly able to mitigate the higher input cost. Another point to note is that their working capital days have been reduced to 58 from 73 days, which is a good number. The reduction in working capital days is getting reflected in their ROCE. This was the overall performance. Now in the steel segment, they have performed really well. Their revenue increased by 39%, EBITDA by 48%, and EBITDA per ton improved by 32%. Their profit before tax showed a significant improvement of 84%. An important point to note here is that volume growth in Q4 FY22 was 13%. So it is not just the pricing power but also improvement in their volume sales, which contributed to the good quarter for Surya Roshni. For the order flow, as per the management, they are still getting pretty good number of inquiries. Their order book is more than 1000 crore, which gives good visibility of growth. Recently, they have bagged an order of rupees 608 crore from IOCL. Since government thrust is on Nal Se Jal, city distribution and various schemes, Surya can be a major beneficiary because of their expertise in 3LP API coated pipes, which are much higher margin products and are manufactured and are not manufactured by many major players. There was major growth in export as well, which is also high margin. In our detailed video of Surya Roshni, I had told you about their DFT based technology expansion. So the DFT plant has been commissioned, which I believe it has started operating from April. This will improve their margin by few basis points. And this DFT based technology was initially pioneered by APL Apollo, but now Surya Roshni has also implemented it. Lighting division of Surya has seen degrowth. Their quarter-on-quarter margins have improved, but when we compare on yearly basis, they have not shown great results. Company has no long-term debt remaining, as we had mentioned earlier. Whatever debt they have is working capital debt. It used to be 1900 crore. Now it has come down to just 500 crore, which is their short-term debt. Now just have a look at this table. Their EBITDA per ton is best in API pipes. This is the best part of Surya's steel pipe division, as they are increasing the share of API and spiral pipe. Their volume share used to be around 9%, which has doubled to 18% in 5 years. And EBITDA per ton was 2800 crore, which has jumped to 9000 crore in 5 years. That is the reason that they are able to grow and maintain their margins. And the volume share of all the low value products is getting reduced, as you can see here. Overall EBITDA per ton used to be rupees 3000, which is now 4600 rupees. Again, they are gaining market share in API and 3LP, which is reflected in their order book and EBITDA per ton margins. Government has increased outlay for infrastructure spending such as railways, roads, airports, Jal Jeevan Mission, River Linking Mission, real estate, city gas distribution. This all can be demand drivers for Surya Roshni's steel pipe sector. From government's PLI scheme, they can benefit in the future as well. Backward integration in LED components may further reduce the cost. They also have presence in PVC segment, but it is not very significant. So ESL, which was business with government, used to be major sales driver. It used to be around 11%, which has come down to approximately 0. The major issue here was the working capital getting stuck, which impacted the business, and also their margins were low. LED, which used to be 24%, has improved to 59%, which is a high margin product. Their EBITDA margin has compressed because of the rising prices of LED over the years. In the last few con calls, management has stated that the LED prices have stabilized, and the chances that LED prices will drop further is very low. Also, warranty period getting reduced, and through PLI schemes, these margins can be sustained. Revenue might look constant, but there are underlying changes in this business. CFL to LED transition, EESL shifting to LED. Because of these reasons, it is becoming a better quality business. In B2C business, distribution plays a major role, so they are enhancing their distribution network, spending a lot on advertisements. So we think that the overall results of Surya were very good this quarter, and if they can maintain this volume growth, this can improve their margins as steel prices are cooling down and higher value added product mix, which can further improve bottom line. Surya has corrected significantly in this market fall, which makes it more attractive valuation wise. We are not SEBI registered advisor. This video is only for educational purposes, and please take your financial advisor's advice before making any investment decision.